Hello and welcome to our macro and strategy update. Is it time to come back on emerging market equities? In our view, this would be premature. The recent decline in long-term US government bond yields is likely to be only temporary. With US economic data expected to continue to be strong in the coming months, the Fed is likely to begin discussing about tapering later this year and possibly during the summer. This will support a further rise in US yields and thus a stronger dollar. These elements will weigh on emerging market currencies and thus are negative for emerging equities. On top of that, emerging countries are suffering from a slow rollout of vaccination campaign, as well as specific political and economic vulnerabilities. India is coping with a devastating surge in virus cases, Brazil has faced a government reshuffle, and uncertainties will rise ahead of the upcoming presidential election next year. Meanwhile, traditional monetary policy conduct has been damaged in Turkey by the recent replacement of the central bank's governor. China-US relationship is moving further apart and tensions are mounting between the US and Russia. Finally, on the economic front, it is likely that Chinese growth will ease in the coming months as authorities seek to curtail credit. So when will emerging market equities outperform developed market equities? First, when developed economies are fully reopened, leading to the strong global growth rebound we expect. Indeed, emerging economies have a greater sensitivity to global growth as they rely on foreign demand. Second, when vaccination campaign in emerging countries has sufficiently progressed so that mobility restrictions began to be lifted. Thank you for listening and see you next week.